second wave. There's also the U.S. election, of course, that matters. The second wave is definitely grabbing the headlines at the moment, but we do think it will be more temporary. You should not forget that we have a much better idea of how the virus actually is spreading, and we also have better measurements on how to rein in on that. Secondly, I think the healthcare system is much better prepared. We have more ICUs, more ventilator, and that should also give more room to keep the economy going. And then probably the third part is a bit more controversial part that we also have to assess, and governments have to assess, what is the bigger harm, is the healthcare situation or is it the economic situation? And I think looking into an election year in the U.S., it's definitely a very balanced view on that. So we don't expect a wide lockdown as we have seen a couple of months ago in Europe and also in the U.S. So it will be much more surgical and much more locally, and therefore the bigger story is that the macroeconomic recovery will continue. We have the Fed on our side. We have now a 7 trillion balance sheet, but that's probably going up to 9 to 10 trillion over the next few months. So we remain positive on the market. We are taking a bit more a balanced view. I mean, played the rebound more by the credit side. Now credit spreads have tightened, but we also do start to like equities, and I think there's good value, in particular some of the laggard markets. So setbacks like now are actually creating opportunities to take up and invest into equities.
Where are we in the economic recovery right now? I note that China is your favourite market right now, of course, closed for a public holiday today.
Well, on China, so it's quite interesting. So they are definitely the one that were first in and now first out. So we can see that the market and the economy has rebounded quite strongly, particularly on the manufacturing side. So we also see that consumers actually rebounding. We're still down on a year-on-year basis, but on a monthly basis, actually sequential basis, consumption is actually recovering very strongly. Now, on China, it's quite interesting. We had a long-standing overweight on China. It was our favorite market, best foreign market year to date. Since we initiated our overweight, the market has gone up 50%, 10% outperforms the global markets and Asian markets. But we actually just took China down to neutral. And I was mentioning before, we actually have a bit more focus on the laggards. We think India, Singapore are some of the key laggards where we start to see value. These economies start to open up. And we do think there's more value actually to grab in this part. So we did quite a big shift on the tactical side and moving China from a sort of a most preferred market to a neutral.